This video is review of JR East's fiscal year 2025 third quarter financial results, period from April 2024 to December 2024. JR East, East Japan Railway Company, is one of the major railway companies in Japan. It operates in the eastern part of Japan, mainly covering the Kanto, Tohoku, and parts of the Chubu regions. JR East runs key services like the Shinkansen, bullet trains, commuter trains in Tokyo, and surrounding areas, and regional rail lines. Highlights of FY2025 third quarter financial results. The financial results highlight steady progress in line with the plan. As of the end of December 2024, revenue increased by 125 billion yen year-on-year, while operating income rose by 54 billion yen to 352.5 billion yen. Additionally, quarterly profit grew by 31.3 billion yen to 216.6 billion yen, although the full-year profit target was surpassed in the third quarter. Additional costs for railway infrastructure maintenance and settlements will be factored in during the fourth quarter. As a result, the final figures are expected to align with the fiscal year 2025 forecast. In terms of details, revenue and income increased due to higher railway usage and strong sales at Ikinaka stores, which is shopping and restaurant areas inside of stations. This marks the fourth consecutive period of revenue growth, contributing to higher income and profit. Among the four business segments, three saw increases in both revenue and income. However, in the Others segment, revenue grew while income declined. This was due to withdrawal costs related to the wind power generation business in the energy sector, which led to higher revenue but lower income. Since overall performance is progressing as planned, there are no changes to the full-year financial and dividend forecasts announced at the beginning of the period. Net profit progress rate against the annual forecast is 103%, which is a great result. Although progress has already exceeded the annual forecast, FY 2025 results are expected to align with the forecast of 210 billion yen after accounting for railway infrastructure maintenance. Changes in operating income. Operating income rose to 352.5 billion yen, an increase of 54 billion yen. The primary driver of this growth was an increase in JR transportation revenue, which rose by 73.5 billion yen. This included a 9 billion yen increase from commuter passes and a 64.5 billion yen increase from non-commuter passes. Within non-commuter passes, revenue was split roughly evenly between the Shinkansen and conventional lines. Also, retail, real estate, and hotels revenue increased. Maintenance expenses increased because of rising prices and increased spending on maintenance, after a period of restraint during the COVID-19 pandemic, have resulted in a decline of 17.5 billion yen in profit. Transportation segment. Transportation business saw a 76.9 billion yen increase in operating revenue, primarily driven by passenger revenue. Commuter pass sales remained strong from the beginning of the period, while Shinkansen revenue improved significantly, reducing its previous negative performance. All key segments, Shinkansen, conventional lines, and commuter passes, exceeded the plan in the third quarter. Retail and Services segment. Retail operating revenue, primarily from JR East Cross Station Co., is performing well and progressing according to plan. JR East Cross Station focuses on retail, dining, and lifestyle services within and around JR East stations. Transportation advertising revenue has significantly exceeded the plan. However, it remains at about 83% of fiscal year 2019 levels. Real estate and hotels segment. This segment is performing strongly, alongside transportation, driven by real estate sales, rental fees, an increase in managed properties, and hotel operations. Operating revenue from shopping centers, offices, and hotels exceeded the plan, reaching 110% of the previous year's performance in the third quarter. Hotel business with Hotel Metropolitan and Hotel Metz both performing well. Haneda Airport Access Line. The Haneda Airport Access Line is a planned railway project aimed at improving transportation access to Haneda Airport. Construction has begun on the East Yamate route and the Access New Line, with the goal of opening in the fiscal year 2032. East Yamate route, which connects Haneda Airport and Tokyo Station, is expected to connect Tokyo Station and Haneda Airport in approximately 18 minutes. Although it will not happen soon, the launch of the new route to Haneda Airport will bring new and stable revenue to JR East. Takanawa Gateway City. It is JR East's another ongoing development project. Takanawa Gateway City project is a large-scale urban redevelopment initiative centered around Takanawa Gateway Station on the Yamanote Line in Tokyo. The project aims to create a new smart city integrating offices, commercial spaces, residences, hotels, cultural facilities, and public spaces. 2 buildings are set to open on March 27th, while other buildings, including residents, are scheduled to open in spring 2026. The project's costs, expected revenue, and internal rate of return exceeding 10% are progressing as planned. More than 80% of the office floor space has already been sold or is close to being sold, indicating strong tenant demand. Takanawa Gateway City is another JR East's big project. Stock price. This is the Japanese yen-based chart for the last 1 year. The Japanese yen stock price is 2,998 yen as of March 10th, and the US dollar stock price is $10.10 as of March 10th. Current PBR is 1.18 and PER is 16.1. Dividend yield is 1.73%. Compared to the past few years, PBR and PER are roughly the same figure. But dividend yield is higher, since simply dividend among has increased. The stock price was sluggish at the beginning of the year, but has recently started to rise again. Conclusion. JR East went into the red during the COVID-19 pandemic, but has been recovering recently. New projects such as new Haneda Airport Access Line and Takanawa Gateway City are ongoing, and stable profits can be expected from transportation, retail, and real estate business. Main business performance improved, resulting in good financial results.